Hi, it's Stan Reinford, and welcome to this week's market update for June 3rd. It's June already. So, welcome. Thank you again for all the great compliments and great conversations, great questions, great suggestions. Had a lot of feedback on using the 10-year as being a little bit easier to understand. So, again, remember, the higher we are in this chart, rates are higher. The lower we are, rates are lower. So we want it to be lower in this chart in the 10-year. So let's kind of jump into it. Let's help those that are joining. We've got a lot of new people this week joining. And the green candlesticks or the candlesticks down below are red or green. A red means that interest rates went up or stayed sideways, and a green candlestick rate means rates went down or went sideways. So we're kind of going sideways at the moment, with especially as volatile as it is out there. So let's jump into it. Let's talk about market moving news. So again, the whole thing with the Middle East is still not straightened out. In fact, it got a little bit more hostile where Iran as well as Hezbollah are rejecting the partial ceasefire with Israel. So we'll have to wait and see what's happening there. Oil prices jumped with regards to everything that's happening here a little bit. So again, it's up and down. It's kind of a roller coaster. As for tariffs, I'm sure you heard about that too. The U.S. is threatening tariffs on 60 other nations that are using forced labor to manufacture goods. So that is supposed to start in July. Again, it's rhetoric at the moment. However, just look at what's happening to the markets out there. Just by words, it moves the market. So we'll have to wait and see what happens. As for a resolution in the Middle East and everything that's happening there and the complete opening of the Strait of Hormuz, we will have to wait and see. It's been going on for quite some time. So let's talk the Fed. So Kevin Warsh has his work cut out for him. One of the things that is being proposed is something called the Dallas Fed's trimmed mean effect, which all it really means, it's simple. What they're doing is taking out the high numbers and the low numbers and using what's in between. In fact, I remember in certain sports they did it. In fact, I remember when the Olympics were on in the winter, they were talking about using those. So it's not an uncommon thing to use. The question is how will it transfer into economic numbers, either increasing rates or decreasing rates, and hopefully decreasing rates. So ADP, let's talk jobs. So ADP released their weekly employment report for May, and it showed that there were approximately 122,000 jobs that were created, although April was revised downward. A few thousand people, but it was still revised down. The bottom line is job growth is still steady and everything is moving ahead. The big thing that's happening, though, is more than 50% of the jobs are coming from healthcare and other areas, which again tell you that it could be just because of the aging population and everything that's going on out there. So we'll have to wait and see. But those jobs there are not ones that are going to economically move everything. They're not coming from, in most cases, small businesses and things like that. So in the meantime, let's talk housing. So Cotality came out with their report and showed that values are still on steady of somewhere around 4%. In fact, they're predicting a 5% increase for the next 12 months. Again, keep in mind, yes, rates are higher at the moment. However, if you buy today and a year from now, that would be your equity that has increased in that home. If you sit on the sidelines and you wait, you're going to pay that much more for a home down the road. And even if rates go down, it might not change your payment a whole lot. However, you start out a little bit more today and refinance in the future, then you could very well save a good bit of money on a monthly basis. So let's talk about interest rates. So that's the question that I'm hearing a lot of right now. Interest rates are in the mid to upper sixes, somewhere around 6.6 is the national average. Again, it all depends on, there's about 15 things that go into helping price an interest rate out there. Everybody is like a fingerprint. Every situation, whether it's a primary residence, second home, or investment, whether it's a 30-year loan, a 15-year loan, whatever that might be, Remember, we help first-time home buyers all the way to those that are moving up or moving down, whether it's an investment property, second home, or primary residence. We also help with renovation loans, reverse mortgages in refinancing and also purchasing. So keep that in mind too. So they have a lot of different capabilities there, and are good for some people, and other recommendations for others that are out there. So, and remember, most of all, we're helping a lot of people refinance. Even with higher rates, we're consolidating a lot of their debt, eliminating that, and still saving them thousands of dollars a month. And in some cases, taking some of that savings and applying it toward their mortgage, and then paying it off sooner than they would have at the 3.5% that they were at. So have a great week. If I can be of any help, please let me know. And would love to help you in any way that we can. Have a great week. Talk to you soon.